Hi, everyone. Welcome to another ShareWise webinar. Today, we are fortunate enough to be joined by Electro Optic Systems, and we are joined today by CEO Dr. Andreas Schwer, as well as the CFO, Clive Cuthell. Thank you both so much for joining us here today. Today, Clive and Andreas will go through a presentation with us, and then we will take questions from the audience. So feel free, whilst they're presenting, to put in any questions in the Q&A chat box. Anyway, I'll hand it over to you, Clive.
Thanks, Caitlin. Much appreciated. So just a couple of words of introduction from me, and then I'll hand over to Andreas. So my name is Clive, and I'm the CFO at EOS. I've been a CFO for more than 20 years, previously with Rinker Group, Wholesome, and with Nuplex. I joined EOS back in September because of the opportunity to turn around the business and commercialize a lot of defense technology. Today's slides that we are going to go through, that I'll just flick through on the screen, include a number of pieces of information. There's not new information or new slides in the material that we are presenting today. This presentation includes information that has previously been announced by EOS to the Australian Stock Exchange. And that includes a number of important announcements that are listed on the screen just now, covering a range of matters. So we will talk through a number of aspects of the company, including context to the information that we have provided previously on the Australian Stock Exchange. And both Andreas and I will be available to answer questions as we get through this. So with that, I'm going to hand over to Andreas.
Thank you very much, Clive, for your introduction. A few words to me. I'm a defense and aerospace guy working in this type of industry for more than 30 years. Amongst my engagements, I've been working 14 years for the Airbus Group in the space and in the defense and helicopter division. Amongst those roles, also head of engineering of the helicopter division. And I've joined Rheinmetall. I was for a couple of years with Rheinmetall, leading the combat system division, leading the international business division of Rheinmetall. So I was the guy introducing, for example, the Boxer vehicle to the Australian markets. So I have an in-depth experience in running and operating complicated defense and aerospace businesses. And I joined EOS August last year as part of the renewal process of the company, and happy to be here now and organize the turnaround of the company. So on the slide, you can see the new management team of EOS, most foremost our new chairman, Gary Hounsell. Gary has a very extensive experience in corporate finance and in many commercial-oriented businesses around the globe. He is long-lasting experienced as member of various high-level boards in Australia and abroad. So he's for us the right chairman to lead us through a phase which is characterized by commercialization and industrialization. Then you find myself, CEO of the company, with quite some international profile and experience over the last 30 years. And Clive, our new CFO, who is bringing all the commercial competence to the table, which we need to make this turnaround successfully happening. So we all commenced our job August, September, November last year, so brand new. Obviously, we have also new management team members on board, which we have not shown here. But the entire management structure of the company has changed significantly over the last few months. On this slide, we can show you EOS at a glance. So the overview, it shows you three business pillars. Those are the three business pillars we are concentrating on in the future. And a fourth one, which is hidden behind here, but I will explain you in the next few minutes what this is all about. So our first pillar, which is called defense business, is our bread and butter business. It's the business which made us quite famous over the last 30 years. It's mainly the remote weapon station / turret business. This is a product line where we are a world market leader in terms of performance, accuracy, and reliability. We have a couple of systems introduced in the past to the market, most notably the R400, which is a bestseller in its range. And we are about to widen our product range. We have recently introduced the R150, the smaller sister to the market, which is the most lightweight, most advanced system in the small weight class, to go on small 4x4 vehicles or small tracked vehicles. And we will launch, beginning of next year, the R800, the bigger brother of the R400, which will be the high end of the remote weapon station market, which will be quite unique in its class. We also have recently launched counter-drone systems based on kinetic kill. This is something which became very popular during the war in Ukraine. It is, from a commercial perspective, quite unadvisable to go with missiles and rockets against slowly flying drones. It is really uneconomical. And as those drones typically represent a cost of $10,000–$20,000 only. So most of the NATO countries have reinvented the kinetic kill of those kind of flying objects. And this renaissance of kinetic kill in the air defense mode is becoming a major business for us in the future. This comes very unexpectedly because this is something which was done in decades ago. Now it's coming back and it's adding up to our business portfolio and our revenue potential in the future. Next one in line is our directed energy products, which come up in the next future. This is a new product segment, which hopefully in the future we can show as a fourth pillar on the slide. We have invested in the past millions of dollars in the development of high energy laser weapons. We have today a 36 kilowatt prototype in the field. It's working. We are showcasing this to customer clients and interested parties. And the next step is to bring this into a commercial product range and to expand the power level from 36 kilowatts to more than 100 kilowatt. This will be the future in the battlefield in terms of engagement, not only against drones, mortars, artillery shells, and missiles, but also for other type of applications I will talk about in a minute. So the revenue expectation for the defense system today is around about $100 to $180 million, with I would say an additional potential thanks to the counter-UAS, counter-drone application in the future. The second pillar is EM Solutions. EM Solution is a satellite terminal manufacturer, Brisbane-based. We acquired the company in 2019. This product range is highly profitable, as our weapon station business is profitable, but here it's even slightly better, more profitable than the weapon stations. In the weapon station business, maybe allow me this comment, we typically talk about an EBITDA range of 15 to 20% over sales. EM solution products typically are slightly above this range. So it's a very profitable business. We are quite unique in that marketplace by a very special technology, which is highly appreciated by customers around the world. We are confident that EM Solutions is one of our ground jewels to make its journey in terms of growth. Their growth rate year over year is more than 20%, and so far only limited by our limited capability to put in capital and cash. This company obviously has a great future and will become of more and more importance for us. The third pillar is our space system pillar. Space system is what the company has had since its origin. In the space business, we became famous around the world for highly accuracy space debris tracking, for space analysis, space intelligence, space awareness, mainly towards commercial and civil clients. So what we are offering are services, data services for satellite operators such as Eutelsat, Inmarsat, to give them data on space debris that they can avoid collisions in space. This is a market which is interesting, but obviously very limited in size. And we have decided to change this, to change the direction of this business into the more military area. We want to go into space control and space warfare. This is an absolutely new trend. The United States of America have recently announced to go into space warfare by building up a capacity and capability to engage against satellites from ground by high energy laser systems. Several other NATO clients and NATO countries have announced to follow that kind of example. Also, the Australian government has expressed interest in becoming more active in space control. In order to do that, you need to have three technologies under control. You need to have a high energy laser technology in-house, which we have. You need to have the space tracking capability, and we have demonstrated that over many decades. We have highly accurate tracking systems in place to allow us to do those kind of jobs. And third, you need to have the telescope technology under control. Also, that one we have demonstrated as we are operating our own big telescopes on Mount Stromlo, close to Canberra in Australia. So space systems, it's a future business. It will come into play. with new products, with products serving this military market to engage against satellites, I would assume from 2026, 27 onwards. It takes some time to commercialize it. It's a brand new market segment. And again, it's a very sensitive business where we need the government support. So those are the major elements of our business in the future. We've decided to cut off any other activity which is not called core business in the future, in order to concentrate on things which we can manage, where we can control the risk, and where we know it's a profitable business with a great business outlook. All the other things which do not fall into those domains, we have stopped. Please go on. So when we took over the company leadership positions last year, we were confronted obviously with a distress situation the company was facing because of some unfortunate decisions in the past, and because of some, I would call, force majeure impacts the company was not in control of over the last few months. So what we've done is we have launched immediately a restructuring program. The restructuring program has been implemented in the second half of last year. We made more than 30% of our staff redundant. The last persons have left the company mid of November last year. So we can tick the box that has been done. Important to know is that we have taken out mostly indirect positions, overhead positions, corporate positions, which were not necessary to conduct our business. So all this kind of additional fat is gone now. So the restructuring program, which also came along with a lean organization, a lean structure, has been implemented, and we are successfully benefiting now from those steps. We also have teased our investment in SpaceLink. SpaceLink was our initiative, US-based, to set up a broadband optical satellite communication system. The technology behind the idea is perfect. It's wonderful. It's really leading into the future. Nobody has attested that, but the company EOS is, I would say, 100 times too small to run and set up such kind of business. So we could not finance that, and we went out to the market at a time when the financing market in the US was in big jeopardy, and we failed to attract the right level of investors for the program. So overall, and that was one reason of our financial distress last year, we invested lots of money in this activity, but we stopped it. We have put SpaceLink into a kind of Chapter 11 process. Process is called ABC, following California law. It's now in liquidation, and there's no more money drained into this company from EOS side. Also here we can tick the box, it's solved. We have, if you go to bullet number 3 here, we concentrate on cash flow. And I want to mention one point. The company has signed a couple of years ago a ruling contract in the Middle East to deliver more than 500 remote weapon stations. This contract by itself is very profitable. The company unfortunately accepted some terms and conditions which were not really fortunate for the company. Terms and conditions which prevent us from cashing in systems when it's delivered to the client's base. We have corrected all that. We have signed an amendment to the contract February this year, and with this contract we can deliver now our systems into storage of the client and get almost fully paid by that one. So that has a dramatic impact on our cash situation. What has happened before is we had to pile up finished goods, and we have more than $138 million of finished goods sitting on our shelf, waiting for the customer to come with vehicles for integration of our weapon stations to get it cashed in. All that is history. We now can take the inventory, we can take the finished goods from our shelves, deliver it to the storage of the customer and get paid for. This is allowing us a liquidation of assets, which is helping us to optimize the cash flow and optimize profitability of the company, and is helping us to pay down the debt which we had to take last year. And I'm sure Clive will give you some further flavor on the financial restructuring measures which we have taken in September last year. Cash flow remains in our focus, so we do all and everything to again liquidate our existing assets, our working capital, our inventory, predominantly from this big ruling contract in the Middle East, but also all the new contracts which we have signed and which we will sign in the next future. All those contracts are highly cash flow positive from day one, in order to secure that the company is improving month over month its cash position, to enable us to have a more healthy business outlook in the future. We also have a very disciplined management and cost structure being put in place by optimizing internal workflows, internal processes. We have updated our tools and mechanism in order to control costs and expenditures. And obviously this will remain in our focus over the next coming years. Last but not least, we have started strategic discussions with partners around the globe. You might recall that in the past, EOS went to the market by itself as EOS. As such, we have set up a facility in Huntsville, Alabama, to enter the US marketplace. This is a very long-lasting, long-duration activity, which needs lots of upfront capital. Just to give you a flavor, we have invested more than $35 million into the setup of our US entity before the first contract did click in. The market is coming now in the US, and we are confident the investment was a good one, but we cannot afford to do this in a kind of replicate mode in other key markets, such as the French, British, German, Italian market, and so on. It's simply too CapEx intensive, and it takes too long time. So we have changed our strategy. We go for partnerships with the objective to team up with local champions of the respective markets to share revenues and benefits, but to benefit in particular on our side from a CapEx light approach. We do not need to put lots of money in place. We can benefit from the financial strength and the capital from our partner coming in and from his customer intimacy, from his engagement with the client, from his strong lobbying network. So this will allow us to significantly reduce time to market and to benefit from that with a significant increase in revenue over a shorter period of times. We also have ongoing discussions with some very major foreign OEM for potential engagement in terms of sharing markets, sharing product lines to allow us to also enter into other markets and to widen our product line without going through long-lasting own development cycles. Also, this is something which is opening up big opportunities in the future, and I'm sure the company will be in a position to announce something over the coming month in this respect. So those are the actions to bring EOS back on track. The US today is a new EOS, it's EOS 2.0. There's no comparison with the past, but with a great perspective and a very bullish market. Clive, if you please can go on.
Thanks, Andreas. I'll spend a second now on the funding situation of the company, just outlining the funding that we put in place and the next steps that we have in mind. So in September last year, the company took debt funding of $70 million from one of our very long-standing equity investors, Washington H. Soul Pattinson. And we took 70 million of debt, as you can see here on the screen, and that is not cheap debt. The price of this debt reflects the fact that the company was in a very difficult situation at the time, and this was the best alternative that was available to the company back in September last year. And as you can see, the maturity profile of this debt runs out with a first installment which is due in September 23, when we have to repay $27 million. Then we have to repay $20 million in April 24. And in October 25, some 36 months from initial drawdown last year, we have to repay a final $52 million amount that's repayable then. The important aspect of this funding is that it gives the company time to implement a number of steps to improve the position of the company. And Andreas has talked about some of the actions we've taken, and he's going to talk in a minute a little bit more about some of the other actions that we have in place to drive the forward growth profile of the company. Before we do that, just a couple of remarks on the more recent financial history of the company. So as Andreas indicated, in Q4 last year, we announced that we had terminated our investment in the SpaceLink venture. That is in liquidation, and the company put $26 million Australian into that business during calendar 22, and that cash drain has now ceased. No further investments will be made in that because it's in liquidation. In addition, as Andreas mentioned, we implemented a headcount reduction program The impact of that was that more than 100 roles were removed from the company, and that was all carried out in Q4 last year, which means that in the first quarter of calendar 23, our staff costs have fallen from a previous quarterly amount of about 15 million to $9 million in quarter one of calendar 23. So that's a significant improvement in the cash operating cost base of the company. Most importantly, however, was on the other side of the ledger on customer receipts. So Andreas mentioned that we had signed an amendment with the customer that we serve in the Middle East, and the effect of that is to allow us to get paid earlier on this contract. We announced that to the ASX as part of our information provided at the end of February. That's a very significant announcement because what it does is it de-risks the collection of cash from this customer in the Middle East. The customer is a sovereign nation. It has a high credit rating, and we believe that the credit rating or the credit risk of this company is very low. We also believe that there are no ongoing disputes with the customer in relation to product quality or any other issues. So really the circumstances around collection of that money from the customer in the Middle East really have changed a lot with this contract amendment that was agreed in February. The effect of that is that we will be able to realize the over $140 million investment that the company has in working capital. We'll be able to realize that over a shorter time period and with lower risk than previously. And we'd expect to collect that money over the next 12 months or so. That amendment and that customer collection was one of the most significant things that underpinned our Q1 cash collections. So we announced our quarter one cash flow results to the Australian Stock Exchange at the end of April. And some people will know that in that we included $61 million of receipts from our customers. And that included significant benefit from this contract amendment that was signed in February. That also underpinned a significant net positive cash flow during Q1. So the company had its strongest cash quarter for many quarters in Q1 23 because of some of the changes that have been made, including the customer and the improvement in the operating cost base. And the net result of that was that the cash balances that the company holds went up from $21 million at the end of December to $46 million at the end of March. Now, as you can see on the screen, we have a debt repayment due in early September of $27 million. The company has a hell of a lot of actions in place to improve the operating performance in the business. They started last year and they've been continuing in Q4 and in Q1, and they're continuing in Q2. So we're very optimistic about the future of the company and our ability to service the debt levels that the company has. With that, I'm going to pass back now to Andreas, who is going to talk about each of our three businesses. He's going to talk about the defence business, and the space business and the EMS and what we've been doing in different parts of these businesses, and in particular what we've been doing to deal with customer concentration risk and to deal with the product opportunities that the company has. So over to you, Andreas.
Thanks, Clive. So before I jump into the slide, I would like to give a comment on the customer concentration risk. I can understand that comment. The risk in the past was given because mainly our revenue stream came from that is going to be diminished over time. And a very important aspect here is all what is happening in Central Europe and in Eastern Europe. Driven by the war in Ukraine, we do not only have the opportunity to deliver directly into the battlefield through different channels, but also to participate to the big military expenditure profiles in Western European countries to benefit from that one, that they push up their arsenals in terms of weapon inventory. So overall, our customer base will be widely broader than in the past. This is also supported heavily by our structured approach to go to market and by our partnership approach, which will allow us very rapidly to enter markets in a very structured, analyzed and disciplined way, which was never done in the past. Just to give you a flavor, the European market for EOS was almost in no existence. We sold some systems to the Dutch market in the past, but all the major European Western countries, we have not really approached in the past. This is going to change. And with a widening up of our potential client base in Western Europe, a more structured approach also to the US market, we have a much bigger opportunity, not only in terms of revenue, but also to mitigate risk by a diminished customer concentration. So that's what I wanted to say to this particular aspect before we dive into this slide here. Cash collection is a priority, at least for this year, probably also for the next year. We will concentrate on cash. Clive was mentioning that we can liquidate now our net contract assets in the so-called Alamein contract in the Middle East, more than $140 million. We have proof that and evidence that this is going to happen, not only by the Q1 result. We've delivered already more than 7 batches of systems into the storage of the client. We got the seat, we got the money onto our accounts, so it is working. So by that, and by the fact that we can control the timing of this exercise, so we can deliver as many systems as we want in a certain period of times, we can control the cash flow pretty much from our end, which is a huge advantage compared to the situation of the past. This is possible only because of the second contract amendment which we did, or the third contract amendment which we did and signed in February 2023. Again, also the other contracts will be cash positive. To give you a flavor, the contracts which we have signed with the government in Ukraine, they are leading to down payments, to cash flows of 90 to 100% before the systems are leaving our country. So this is giving us another leading edge in terms of cash collection and cash surplus generation right from day one. If you look to the revenue growth perspective, I was mentioning the market is very bullish. The market is bullish in many domains and from different angles. First and foremost, Australia, with a publication of the Defense Strategic Review, there are lots of elements in for EOS which gives us confidence. Yes, on the one side, they've reduced the Land 400 Phase 3 program. They've reduced the number of vehicles from originally 450 to 129, but this was expected to happen. That's already built into our business plan. So the kind of negative impact coming from that to us is almost negligible. On the other side, we expect the Australian Army to acquire more weapon stations, to weaponize already existing systems, already existing vehicles in their fleet, to compensate for the loss of firepower by the reduction of the Land 400 Phase 3 program. For us, of at least even more importance is the so-called definition of acceleration or accelerator programs. DSR is talking about 5 programs falling under this domain. One of those 5 so-called accelerator programs is directed energy. It's the high energy, high power laser business. That's the domain where EOS is strong in. That's the domain where we've invested in the past our own money to build up a 36 kilowatt system. Australia is now in a position to fund those activities, to support us in order to get to the next generation of product, to the 100 kilowatt class of system, which will be the ruling class in future battlefield operation. So that's a very positive outlook. So we hope to engage into some funded development activities, which will allow us to have a fielded product, a qualified product for mass production by 2025, 2026. The Ukrainian contracts are a wide door opener to the European market. So we signed contracts with Ukrainian entities. There was one question in the upfront of this call asking on when do we expect the kind of condition to be lifted or to be fulfilled. The condition is linked to a demonstration of our system on Ukrainian platforms in the Ukraine and the successful execution of a firing trial. The firing trial itself is well within our capability, so there's no risk that we fail there. It's very unlikely to happen. It's only a question of time. I mean, it requires an export permit from the US for the cannon, from Australia for the system. We have to do some kind of logistics effort to get those systems into Ukraine and to do the firing. We expect that to happen in the time frame of July, August. Once this is done, the contract will come formally into place, and we expect the orders in batches to come in that we can start with the delivery. Those Ukrainian contracts are short-term contracts, meaning that we will realize the revenue within 2023 and 2024. So it's a short-term opportunity. We are also in negotiations for further contracts to come with both Ukrainian entities, but also Western countries, Western governments, to potentially become part of a Western donation program. We are quite confident to be able to sign something before year end in this context. So this will give us a push not only in the Eastern European market, also in the Western European market. We have started the low volume production of the smaller sister of the R400, the R150. It's a lightweight product. It's the most lightweight product in its market segment. It has great chance to get on top of very small 4x4 vehicles, which are otherwise not capable to carry weapon stations because of weight. The system is most modern, it's modular, and we expect this to go into mass production by end of next year, and see a great future potential for this type of product. We will also roll out in the first half of 2024 the bigger brother, the R800, which comes with a big 30mm cannon, the 30-173, the Mark 44 cannon, for example, from Northrop Grumman. This is a product which will define a new market segment. There is no weapon station in this domain on the market. We believe the market potential is huge. It will compete against the medium caliber turrets, which weigh 4 times more than our R800 and which costs 3 to 4 times more than our R800. But they're giving exactly the same firepower, the same range, the same precision. So we believe the market potential is great for this R800 product. Once this is launched, we have then 3 sub-product lines in this range on the market with a much higher revenue potential. This is something which is coming short and medium term. We also have launched last week a product called Slinger. Slinger is a kind of derivative of the R400. It's optimized for counter-UAS application. It comes with an own radar. It comes with some modification and optimized fire control software package to be able to engage against drones, for example. This market, as I was mentioning before, is booming now. The market was not in existence before because everybody thought counter-UAS operation means missiles and rockets. That's only partially true. For the semi-commercialized drones, the best way to engage the most commercial approach is using kinetic kill, cannon-based air defense. Our product is in a superior position here because our product has at least 30 to 40% more effective firing range and more accuracy than any other competitor in its respective class. This is proven and widely known to the market. To give you one example, there are a couple of demonstrations and tests ongoing in the United States. The big US primes being invited to show and to demonstrate the integrated counter-UAS systems. They typically take our system as their preferred kinetic kill option because everybody knows that we have this leading edge in terms of range and precision. So we are confident to get into business here in the course of this year to sell the first products, and this could open up also a quite significant revenue stream in 2024 and 2025, which was not in existence prior to the war in Ukraine. The war in Ukraine has changed very much the battlefield situation. It's not the war in airspace between an F-35 and an Su-34. It's not the war of the highly sophisticated militarized big drones. It's a war of the small commercialized drones which come in big swarms. And again, the action to defeat them is cannon-based, to a lesser extent missile-based, because it's simply too expensive. And in the future, it's kinetic kill. It's directed energy. It's the laser weapon. Once they come into play, once they become more affordable from 2025 onwards. So that's giving us a great new field of operation in the future. And again, directed energy, we have stopped funding that by our own means. We can't afford that on the one side, and on the other side, I don't know and I don't understand why we should do that on our side. All of our competitors, and there are only a few on the marketplace, they are fully funded by the governments. We have the great prospectus now to get also funding by the Australian government, but we also have ongoing negotiations with a couple of foreign third-party governments who are highly interested in our technology. And if you're lucky, we might be able to also enter into a partnership with one of those Western countries to have two product lines, two parallel activity of product development on the directed energy business segment. So all of that is very promising in terms of outlook. And again, in terms of kinetic kill options and weapon station business, very short-term growth perspectives. Obviously, to turn this all into cash and revenues and profits, that needs this discipline, which I was mentioning before. So we've put in place a very rigid reporting system on a monthly basis. Business has to report the actual status of each and any program and the ongoing activities, not only in engineering, but also in production. We want to focus on that over the next 2-3 years in order to make sure that we increase profitability and to generate more cash than what is needed to pay down debt and to invest in the necessary R&D activities on decent scale. Again, we have stopped cash drains like in the past to fund things like a directed energy program with tens of millions of dollars. Those times are gone. Those systems will be funded by third parties, by governments. Please go on, Clive. So EM Solutions, it's a huge growth story, as I was mentioning before. Year over year, more than 20%. We are very proud of having this kind of high-end company in our portfolio. We have been approached a couple of times by foreign companies, by big companies. They all wanted to buy EM Solutions from us and offering a decent amount of money for the company. We've decided not to do so, simply because the revenue and the cash growth perspective is too good to let them go now. So we want to keep them in the portfolio. We want to let them grow. We will support them in their growth by the new mechanisms in place, by the partnership modes to enter the international markets, to allow the company to become a dominating player in its market segment. And hopefully we will be in a position to pretty soon announce some good order intakes also for this company. If you go to the last segment here, the space technologies, as mentioned before, we will convert the business from a more civil-oriented business into a more military domain-led business. Space warfare will become quite decisive in the future battlefield. Again, this is in the middle of the doctrine of not only the United States of America, also it will become very important for other Western NATO countries and the Australian local partner. We are perfectly positioned in that one. There's, other than American institutional businesses, there is nobody in the market segment in Europe and nobody in the eastern side who has a similar capability as we have. We have all the ingredients, as I was mentioning before. We have the laser, we have the tracking capability with adaptive optics and a highly sophisticated software, and we have the telescope technology in hands. So this is a market segment which is brand new. It's coming up. It's coming up not now. It's coming up in 2026, 2027, but we will be one of the first movers in the segment and hopefully get a decent market share. One remark back to the directed energy business. Also, this is a segment which is not a commodity type of business. It's a business where we are one of the very few players in the market, probably outside US, the only Western company being able to offer this kind of technology to the Western marketplace. Also, this will give us a decent market share and a decent revenue perspective, not in 2023, but in 2025 and onwards, once we have done commercialization, industrialization of the product. So this is the landscape. 4 product lines, highly profitable, with a great growth perspective. Excuse me, please. Lost my voice. So in conclusion, the market outlook is very bullish. It's very promising. We expect that we can benefit from that to a great extent. We have a new leadership team where we concentrate on those certain specific business lines, which are highly profitable. And we have an extreme focus on commercial success, on industrialization, and in getting things to the market in time, not making products more perfect as they should be. We've done the initial steps of refinancing. Clive was mentioning that we got the required funding, the required working capital to run the business. We have stopped the cash drain to any kind of business which is not profitable, in particular the space link related activities. And we've put cost reduction measures in place. Our cost base now is minus $25 million per year, just in the area of direct labor and associated cost, which is giving us a very sustainable baseline to generate good growth markets, good net profit margins in the future. The strategic partnering approach and the go-to-market is offering us many more opportunities without eating up capex and without taking too long time. That's a great swing to the better side. And our new product range in counter-US applications will open us new markets. I was mentioning the Slinger, which is a particular new version of the R400 focused on air defense purposes. I may also announce that we will have, hopefully next year, another product line which is based on multi-rocket launcher systems embedded on our gimbal systems, which will offer to the battlefield another kind of effector to engage against flying objects. Those kind of rocket launcher systems can also be in combination with kinetic kill options integrated on one platform. So this is opening up even a wider corridor. This is planned to happen in 2024. So overall, a much widened product base, much widened opportunity to generate revenue, and a much widened customer base in the next future to diminish the risk of a concentrated customer approach, which was the case in the past. So the actions for 2023 and 2024 is to collect cash. That's our super priority, and we will focus all of our efforts on that domain. To be able to pay down debt and to be able to fund the growth of EM Solutions and to enter into the markets as just announced. We will secure additional sales contracts. So we have done a very good job in the beginning of this year. We got the first 2 contracts into play with a new customer on a new continent. And we are very optimistic to secure some further contracts before end of this year, which will give us a wonderful order book and a good baseline for further growth in the future. We mentioned the disciplined approach to cost and capital, and the debt repay remains also one of our key priorities over the next 18 months. That's it in an essence what we wanted to share with you guys. We understand that there's lots of frustration on the market given the share price evolution over the last 2 or 3 years. I'm with you, I can share this frustration. Many things happened. In the beginning, it was a kind of perfect storm, a combination of unfortunate management decision on the US side, plus external factors such as COVID, such as a breakdown of the technology funding market, such as other aspects, which for time reasons I cannot mention here, but all of that together was leading to the liquidity crisis in 2022. We managed the crisis, we got the refinancing, we did the restructure, we went through the trough, we stabilized the company, we have delivered a wonderful Q1 this year. Further quarters will follow to demonstrate that we walk the talk, that we deliver as promised, to give confidence back to the market and to give any good reason to the market to let the share price go where it should be. Thank you very much.
Thank you so much, Andreas and Clive, for such a great presentation. I can see that there has been a lot of effort putting into this turnaround with new management and condensing to the 3 companies. To anyone that has just joined, welcome. Feel free to put in any questions you have into the Q&A and we'll get started. But the first question from me, Clive, what are the typical product development timeframes?
Thank you, Caitlin. So EOS is a defense technology company at its heart. As Andreas mentioned, the company has been around for 40 years and has done a lot of innovation over that time. It's very clear to Andreas and I and a number of the managers and leaders in the company that there is a significant opportunity to improve the commercialization process around a lot of product development work that has already been done. Typically, we would look for product development cycles. It can take 3 years, 4 years, 5 years to develop a product. And then it can take another 3-4 years for that product once developed, to be launched and achieve meaningful sales in the market. Now, clearly, that is something that we are very focused on managing. The good news is a lot of product development work has already been done. And now what we're focused on doing is bringing that to market. And while some product launch activity will not necessarily move the needle a lot in calendar 23, success for us looks like continuing our product launch work, bringing products to market, achieving a few sales contracts in calendar 23, and some more in 24. You know, if things go well, people like the new product, what they do is they come back maybe in 24, and then we can see meaningful orders coming in for some of the products launching now. And that can translate to sales that can be quite significant in, for example, in calendar 25. It is important that we manage investor expectations on this quite carefully. One of the things that we've had a lot of feedback from the investors we've been speaking to over the last few months about the way that the company under previous management has communicated about product development cycles and commercialization cycles. So our aim is to provide honest and realistic timeframes, and be quite transparent about how long it takes to develop product and how long it takes to bring these to market. And it's really a case of moving to a situation where we aim to underpromise and overdeliver. But the good news is that in my view, one of the reasons I joined this company is that there's a massive opportunity to develop products. Many of them are in a very advanced stage, and commercialization over the next few years presents a real upside for the company. And we're in an industry where you can get very sizable orders from large players. So there is a significant opportunity there. As Andreas has mentioned, the ticket to that game is cash collection. So day to day, we're very focused on that. We're very pleased with some of the results, some of the actions that have been taken, and some of the results we've achieved in Q1. And we're very optimistic about the future. But product development and commercializations is a key focus for us as we look forward to the growth out beyond, Caitlin. So thank you for whoever asked that question.
Thank you. And we've had a few questions submitted in regards to the Ukrainian contract. And so as we know that EOS will draw upon a support network and a supply chain consisting of over 100 suppliers located across Australia, as well as internationally, what profit margin should we expect to achieve regards to this and other contracts?
So typically in the remote weapon station product line, we achieve EBITDA levels of 15 to 20% over sales. That's also the case for those Ukrainian contracts. If nothing unexpectedly is happening, 15 to 20% EBITDA.
And when will these Ukrainian contracts become unconditional?
In July, August, we will do the test demonstration in Ukraine, and then it's unconditional. The only remaining risk is, if I may say so, it's peace. It sounds very sad, but that's the case. In case of certain political evolutions in Ukraine, they will probably refrain from ordering any further weapon system. That's a typical wartime terms of contract, which we have to accept. But other than that, we are extremely confident to make this contract an unconditional contract and to deliver the systems in the second half of this year. So this is all short-term revenue in 2023 and 2024.
Okay. And someone wants to know, when is winning bid for Land 400 Phase 3 to be made?
So as per the DSR announcement, the government has reduced the number of vehicles significantly. So the two bidders, the two prime contenders, have to go into another round of offering. This will take a couple of months. I would assume up to 1 year with the upcoming negotiations afterwards to find an agreement with the prime contractor, and then the prime contractors will enter into a negotiation with their key strategic partners, which are, amongst others, the turret partners. And we are playing in that domain. So this will take some time. I expect the entire program to be delayed by around about 1 year.
Okay. And a question for me, there's been a lot of trend and talk recently on AI. And I wanted to know, do you see it playing a role in any future operations or any part of the company?
Yes, AI plays a role. It plays already today a role in terms of target tracking. I mean, if you track objects, you need to be able to identify whether this object is is a drone, is a kind of military target, or whether it's an animal running in front of some trees. So AI is helping in that. AI is also helping with respect to doing a kind of flight path prediction of flying objects based on the recent flight path history. So all those kind of things become more and more into play to get more and more intelligent systems into the battlefield. So it's an area where EOS is active in.
And do you see any other specific trends of technologies that you believe will impact this competitive landscape in the coming years?
I mean, one kind of really breakthrough technology is the laser technology, with which you can dazzle any kind of sensor. And if you dazzle the sensor of a missile, the missile goes into self-destruct mode. So with a very, let's say, with a very condensed laser power beam and a perfect tracking system, you can more or less bring down any kind of flying object from space and from airspace. So directed energy will be a breakthrough technology and a disruptive technology for the battlefield. We are in that domain. As I was mentioning before, we are one of the very, very few players in this market segment and have a leading edge over many other companies. So this will be a big game changer. And again, space warfare is brand new. A segment where we combine assets which we have under control in order to be able to engage against satellites, something which is not possible today other than with missiles. Missiles have been banned because they generate too much of space debris. So the laser business is the active weapon system of choice here for most of the countries around the globe, and we will play a good role there. This is very disruptive as well. So those are two key things where we as EOS play a significant role. And I mean, there are several other things, but they are outside of our core portfolio. As I was mentioning before, we do not want to repeat the mistake of the past, to think that we can play in many more domains a critical role. The company is too small. We need to concentrate on certain things and make those things good for the benefit of all of us.
Yeah, just to add one comment to that, Caitlin. I mean, the industry that we operate in, defence, I know a lot of people are familiar with it. Some are not. Technology in defence is a critical differentiator if you're in a military conflict, and that's been the case for decades, or much less than centuries. So there is it's a very important part of the defence activity that many people undertake. There are a number of areas where technology is rapidly evolving, including the ones Andreas just mentioned. An area that is of particular interest to us is that of unmanned vehicles, unmanned ground vehicles, for example. We make remote weapon systems, and if you have an unmanned vehicle, then an ability to operate that weapon system remotely is critical. We've done some work in that area previously. We have made systems that are currently on deployment with military services in different parts of the world, where unmanned vehicles are being operated with our systems on board in a live deployment. That is something that we're very proud of, and it does represent a significant opportunity for the company. It's not necessarily a big opportunity for the company in calendar 2023, but it's very clear that the use of unmanned vehicles and unmanned platforms is going to continue to grow and develop over the next several years, and it's an opportunity for EOS to be part of that. So I'll leave it at that. I see we've got a question on our previous founder, Ben Green. Caitlin, do you want to touch on that?
Yeah, so someone is asking, what is Ben Green actually doing now?
So as we were mentioning before, Ben Green is one of the world leading scientists and researchers in the domain of high energy laser physics. He's probably unique to the marketplace, and we want to use him in this area where he can generate huge benefit for the company in the area of research and development. Dr. Green is no more member of the executive management team, and he's not part of the commercial decision-making process at managerial level, but he's key. He's absolutely key for the company in what he's doing now in the field of innovation and research. And we are proud to have him on board in this domain. There's one other question coming up on directed energy. There was a contract awarded by the Australian government to a British company some months ago. Yes, we are aware of that, and we knew about it in advance. This is a contract which has been given into a product segment, which is coming with a much lower level of power for a different type of engagement. It's not leading to a weapon system at the very end. It has a different type of application. It's complementary to what we will get supported by the Australian government, and as such, we are not in competition.
Thank you. And I wanted to ask, you mentioned in your presentation that, you rely a lot on government support. So what is the relationship you have with the current Australian government?
So we have done a reset with our relationship to the government. In the past, EOS might have been seen as a little bit arrogant, and obviously we believe to be more self-dependent or independent from the government as we thought we can. This has changed now. We are reaching out to the government on all levels, also to the respective levels in the army, in order to re-establish those contacts and to become the partner of choice with a trustful personal relationship in between the stakeholders. So this is work in process. It will take us, I would assume, 1-2 years to get the confidence and the relationship back. But we have had recently at top level various talks with the government, and they've shown us the way forward, and they told us they want us to stay in Australia. They want us to be a proud pillar of Australian industrial landscape, and they're ready to engage with us in a more intense way in the future. So we have all the reasons to believe in that, and we will do our side in order to make this relationship improvement happen.
And Clive, what's their support like for you guys as a company?
Yeah, look, that's an interesting one. EOS has been working with the Australian government and the Australian Department of Defence and the Australian Defence Force for 40 years. And the truth is that through these 40 years, the ADF could not have supported the company more than it has. The company is very grateful for the support that we've had from the ADF over an extended period of time. There has been some ups and downs in the relationship, as you get with any organisation, and as you get in our industry. But we at EOS have benefited from considerable ongoing support over the years in lots of different ways from many different people at the Australian Defence Force. So we're very grateful for that, and we're enjoying an opportunity at the moment to work closely with people at the Australian Defence Force, including the procurement agency called CASG, where we work very closely on a day-to-day basis with a lot of skilled professionals there. And it is a real opportunity for EOS to help support the ADF in its mission to look after this part of the world. So that's a very important part of what we do. So thanks for asking, Caitlin.
Thank you. And with that, I think we can end there. Thank you so much, Andreas and Clive. And thank you everyone who submitted questions. Oh, we have one more question. I'm not sure if you guys would like to answer that in regards to if Rheinmetall win the IFV contract, what is the level of EOS's involvement regarding supply as opposed to Hanwha being awarded the contract?
So the Commonwealth has decided to use EOS weapon station as the default weapon station solution for Land 400 Phase 3, irrespective of who wins the contract. So we are safe in our weapon station participation to this program, which is giving us lots of confidence. What is obviously at stake is whether we have some share in the turret, and obviously this share would only come if Hanwha would win the bid. If that's with Rheinmetall, our participation will be limited to the weapon station delivery. But again, that's our core business. That's where we can make most of the money and where we can manage the risk in the best manner. And we know that it's profitable. Okay, thank you so much. Well, we'll end it there then. Thank you so much, Clive and Andreas, once again for joining me. To anyone that missed out, you're on any part of it, we will upload it to YouTube, so you're welcome to watch it there. But yeah, thank you so much, Andreas and Clive, once again. Thanks, everyone.
Thank you.
Thanks a lot. Bye-bye.
Bye.